Ever get that feeling?
Yeah.
Like you open your wallet and it's that lighter than you remember. Today we're going to tackle something that's been on everyone's mind, inflation. We're diving into this document called What is Inflation.pdf to, really unpack it all.
Yeah, it's sneaky, right? It's like one day your go-to sandwich is $5 and the next time you look, bam, $6. That, my friend, is inflation messing with your buying power.
So it's not just in my head, my money really is kind of disappearing. Okay, but seriously, what's making these prices go up? I see some jargon in here, demand pull and cost push inflation.
All right, picture this. A hot concert, everyone wants those last tickets. Suddenly they're going for way more than face value. Boom. Demand pull, inflation. Now flip at your pizza place. Pepperoni, cheese, all that good stuff costs more. They got to raise prices just to keep the lights on. That's cost push.
So it's like this constant battle, these two forces duking it out, and our wallets are caught in the crossfire.
You got it. And then just to make things even more interesting, there's this thing called built-in inflation. Basically, if businesses think, say, those pizza toppings are going to be even pricier next year, they might raise prices now just to get ahead of it.
That's a little unnerving. Speaking of unnerving, how do economists even measure this inflation thing? It's like this invisible force.
That's where the Consumer Price Index, or CPI for short, comes in. Think of it like a financial thermometer for the economy. It tracks how the prices of everyday things change. Your concert tickets, gas, you name it.
And that's where our pals at the Federal Reserves come in, right? Like they're trying to steer the ship with interest rates.
Exactly. Inflation gets too hot. They might raise those rates to kind of cool things down, encourage people to save a bit more, spend a bit less. But it's tricky. They don't want to slow down the whole economy either. Delicate balance.
So how do we, the average folks, navigate this whole situation? How do we make sure inflation doesn't run away with our hard-earned cash?
You hit the nail on the head. Knowledge is power. This document emphasizes that just understanding how inflation works is a huge step. Like, you might think keeping your money in savings is safe, but if those interest rates are low, inflation might actually be eating away at it over time.
Okay, now that's a scary thought. So where should we be putting our money? How do we outsmart inflation?
Well, think about things that tend to increase in value faster than inflation. Stocks, real estate historically, they've done a pretty good job at outpacing it, even when things get a bit rocky. It's about making your money work as hard as it can.
So it's a race. Our money versus inflation. But here's a twist. This document says a little bit of inflation is actually a good thing. Why is that?
Here's the thing. A little inflation, say around 2%, can actually be a sign of a healthy economy. It encourages us to spend or invest now because, well, we know things will probably cost a bit more down the line.
Little nudge to keep the gears turning.
Exactly. Of course, you don't want things to go off the rails. That's when you get hyperinflation, like what happened in Zimbabwe or Germany. Prices were changing so fast, their money became almost worthless. Not good.
Yeah, not the kind of economic excitement anyone wants. All right, so as we wrap up this deep dive into inflation, what's the big takeaway for our listeners? What should they really remember?
The more you understand the forces at play, that demand pull, cost push stuff, the Fed's role, the better decisions you can make with your money. Knowledge is key, folks.
So next time you're at the store and those prices make you do a double take, remember that's inflation doing its thing. Think about the why behind it all. It's a wild ride, this thing called economics. Until next time, keep those brains engaged.